Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 2nd of June. Starting off with Amigo Holdings, which is everyone's favorite binary bet at the moment, and an interesting development in the sense that we had a minor bear trap to start the month, back down to 6.61 pence, just below the last May low at 7.19, so 7.19, the end of day close trigger there. Above that, on an end of day close basis, we can see the shares going up towards the 200-day moving average at 11.6 pence. That might be of some comfort to people who are trying to punt on this particular situation. Obviously, back below 6.61 pence would change the picture. And obviously, there's also the fundamental factors there which make it such an intriguing binary bet at the moment. Moving along to a stock which hasn't been covered here for quite a while, Active Energy. And here the situation is that the first sort of signs of the shares getting back on the bullish tack. We've had a bear trap from below mid-May support there at 0.7 pence, the low to start June at 0.65. And above 0.65, there's a possibility that the shares will head towards the top of that rising April trend channel at 1.1 pence. If you want some further evidence of such an optimistic scenario, then you want to see an end-of-day close through the 200-day moving average at 0.8 pence in the meantime. But just as a first hint that Active is on its way. The other point to note, I suppose, is the way that we had that unfilled gap to the upside in December. Bear trap gap reversal on that gap's never been filled. So that is actually a positive backdrop for the shares, and hence the 1.1 pence target there, which could be hit as soon as the end of next month if everything goes well there. One of the heroes of the, I suppose it was last month, was April, May, was Keras Minerals, and we came back rather painfully from 30 pence down to 18, but shares back on the front foot again today after a slight bear trap effect. The late low there in May at 18.77, the previous low was 19 pence, so that's a plus point. We've got the RSI back above neutral 50, which is helpful. Probably all we're waiting for now really is an end of day close above the 20-day moving average at 22.44 pence to give us another chance of a move towards the top of the broadening triangle at 35 pence plus as soon as the end of next month. Obviously, we want to see the shares remain above 17-18 pence, which is the burgeoning 50-day moving average area, and also want to see the RSI remain above neutral 50. On to EVGEN, which has sort of started to come back into form now. Nice little sort of double support there towards 7 pence for March and May. And also now breaking that April neckline resistance at 9.2 pence, end of day close above that, and we could finally be on our way for a reasonable rally up towards 12.5 pence, which is the top of that broadening January triangle. I suppose it'd be nice to see an end of week close this week above the 200-day line at 9 3/4, just to give us that much more confidence in the upside scenario. Onto a stock which I thought I covered yesterday, but apparently didn't. At least we're back here today, definitely. Here we've got a situation with Hummingbird with a sort of triple top there at 24 pence and multiple supports there at 20 pence. The easiest thing here, I suppose, is to wait for a break of 24 to give us 28 pence and towards the 200-day line at 29. Otherwise, if you are a fan of the shares, then the longer they stay above the 21.5 pence 50-day moving average level, and the longer they stay above neutral RSI 50 versus 52 at the moment, the greater the chance of a break higher for this situation. But I suppose at least the 20 pence area has been multi-tested, and that does suggest there's a sort of support in place for the shares that may last. But the easiest thing here really is to wait for 24 pence to break on an end of day close basis. Less sort of high profile is the next stock, Petro Energy, which gapped through the 200-day moving average, albeit a stock which is very liquid, but it did actually gap through the 200-day line at 31.84 pence in the middle of last month, and has held that gap, hasn't even gone below the top of the gap, which is pretty encouraging. We've also got the sort of hint of a saucer reversal for this stock as well, and we're just breaking through the old October peak, 40.25, so an end of day close above that, and we could be looking at a reasonable target on the upside if you don't mind a relatively liquid stock. This stage, I suppose, up towards 70 pence would be the target by the end of next month. while we hold above, or the longer we hold above, the 40 pence zone, which looks as though it's on the cards now. We'll try and ignore the fact that the RSI is at 99 out of 100, which is about as strong as you can get, or as overbought as you can get in the near term. But only really back below the 200-day line at 32 pence, let's call it, really delays the upside scenario for Penn Petro Energy. On to a company which I was trying to interview yesterday, but didn't quite make it over the line. But the shares are looking encouraging. Nevertheless, here we've got Savannah Energy just breaking that line of resistance from the beginning of March, end of February. That was at, let's call it 18.5 pence, and an end of day or a weekly close above that could take the shares up to towards the top of this rising or broadening triangle as high as 26 pence. By the end of this month. Multiple support points for the shares above the rising 200-day moving average, also suggesting that we're going to see a decent breakout over the near term. Exactly the same thing that can be said about San Leon. It's been a slow process here, but we've always had that massive gap through resistance that we had in February, and that's been the reason for covering the stock in such a conscientious way ever since. The lowest the shares managed to get after that was 29.5 pence. So the top of that gap at 28. And that normally means that with the multiple support points above the 200-day line, we're looking for a reasonable breakout. Today we've had a gap to the upside, as yet unfilled. It looks like it'll remain unfilled through the 50-day moving average as well. And probably all we're really waiting on now is an end-of-day close, 40 pence and above, to give us a potential move towards that February resistance line projection at 50 pence as soon as the end of this month. At this stage, really back below the floor of the gap. That's at 37 pence, really delaying the upside scenario for San Leon. Next up is a stock which has a few maniacal supporters, and maybe their time is finally going to come now with Serena Energy. Here we've got a broadening triangle in place since the start of the year. Shares have bounced off the floor of that triangle on several occasions, notably in the middle of last month. Probably all we're waiting for now is an end of day or a weekly close back above the 50-day moving average. That's at 2.9 pence. If we can get that this week or early next week, then the shares could be on for a move towards the top of the triangle at 4.75 pence as soon as the end of next month. So that's looking quite encouraging now as well. Onto a stock which the bears keep trying to hit, and luckily at the moment the stock keeps bouncing back. Tern PLC, I think they thought they were sort of home and dry after the move down from 30 to 15 pence last month, but that's sort of the way the market is at the moment. Even on the best situations, you tend to get a 2 steps forward, or 3 steps forward, 2 steps back, or even the other way around sometimes. Currently just on 25 pence, and as I said before, above 25 pence, we're probably looking towards 40 pence for the shares, despite that false dawn that we had last month through 30 pence. But 15, 25 and 40, the levels there on Tern at the moment, and good luck to the bulls on that one. On to a stock which has revived itself after the recent placing and announcement of its new graphene aluminium composite. Here we've got Tirupati Graphite bouncing off that uptrend line from December. That's just around the 90 pence, the placing price. Decent end of day close this week above 95 pence, and the May resistance line there should be enough to get the shares finally on course for the move towards 130, which is the top of the broadening triangle from the turn of the year. Time frame on that as soon as at the end of next month, if we can get a decent weekly close above the 50-day moving average, currently around the 97 pence level. So 95 pence plus close and 97 pence on a sustained basis would hopefully do the trick for Tirupati over the near term. Another stock which seems to be awakening from its slumber at the moment is Better Technologies. Rather nasty price action here in the sense that tends to be sort of hanging around the 007, 008 level, let's call it. And the current situation is, though, that we've managed to push through the 200-day moving average at just under 0.08. A weekly close above that, and we could be once again on for a sort of top of the range move towards 0.11 or 0.12 later in the month. So that's looking a bit more encouraging at Vela, especially with the MACD buy cross that we've just had for the middle of this week. That's it for me today. More updates tomorrow.